Hey guys, my name is Mike Boyd, this is The Money Flare, and today I'm going to be talking about some concerning developments that have happened recently that I think all of you should be aware of. I've been away for some time preparing my next few videos. I finished reading The Intelligent Investor, and I've been reading another fantastic trading book called Alpha Trader, and I was going to give my thoughts on both of them. But Friday was an explosive day in markets, and I want to go over why I think we should all be on high alert going forward. So let me recap how we got to today. I've been bullish stocks ever since May 2020, riding the reflationary wave that we've had following COVID on the back of the extreme monetary and fiscal response from governments and central banks around the world dealing with the COVID crisis. I was strictly on the inflation is not transitory side of the whole inflation debate. And you can go back and check out all my previous videos that I made months ago on that topic and why I thought inflation would not be transitory. My thesis for this was that the sheer increase in broad money supply would lead to persistent inflation and that further increases in bank credit would continue to keep it high. And combine that with the major supply chain issues that we've been seeing, and you get the highest CPI inflation in 30 years. And so we've had elevated inflation, and luckily I got that right. But what I didn't expect was that retail participation in markets would surge the way it did. People plowed their stimulus checks into stocks and options, particularly options where we've seen an unbelievable surge in option volumes compared to stock volume, where in 2021 we saw option volume higher than the stock market volume for the first time ever. Without getting into too much detail on options, they're basically extremely levered financial products. And when we see such large volumes of options being traded, that starts to affect the underlying stock prices. And we saw this in the whole meme stock movement. Just Google gamma hedging and you'll get a better picture of what contributed to the insane price action of things like GameStop and AMC. We also saw a huge surge in the unprofitable tech companies with Cathie Woods and her ARK fund at the center of it. And it was a super profitable 1.5 years in markets. I'm sure many of you watching potentially got interested in markets recently with things like Tesla and other disruptive tech stocks. And you've probably seen some pretty extraordinary gains too. And so post-COVID stocks did fantastic. And now by all metrics, they are very overvalued. But even though we may be in a stock market bubble right now, certain pockets of the market are more overvalued than others. That's why I've focused on these shorter duration cyclical stocks like energy and banks, and I've had a lot of success this year too. And even though valuations are high, valuations are never a catalyst for a crash or a pullback, at least not by themselves. There has to be some other catalyst or spark to set it all off. But with that being said, we've already seen some parts of the stock market bubble bursting slowly. The bubbliest tech stocks, for example, have been having a pretty rough time lately. Things like Zoom or Palantir, Teladoc, Clover, Peloton, the high momentum tech stocks that exploded higher in 2020, all started deflating as of February this year. And I'd say that the catalyst for those stocks was the taper announcement and the possibility of higher interest rates and inflation going forward. They also had really horrible earnings recently and such horrible year-over-year comps. And so some parts of the bubble have popped, but overall the market has churned higher, valuations have churned higher, and money has absolutely poured into the stock market, more than in any other previous years. And I've always said that this can continue for longer than anyone expects. But the new COVID variant Omicron might change things. On Friday, it was announced that a new COVID variant has been discovered, which they've called Omicron. And basically what we know so far is that it has many mutations and it's potentially very transmissible, much more than regular COVID or Delta. And listen, I'm tired, like I'm sure the rest of you are, of all this COVID talk. I think we should all just move on with our lives and learn to live with COVID like we do with other countless viruses and diseases. But that's not how governments have been dealing with COVID up to now. Even though the data clearly shows that the mortality rate of COVID is very low and it disproportionately affects the elderly with multiple comorbidities, obesity being the largest risk factor. Even after all this was clear over a year ago, we still went through multiple stages of lockdowns and travel restrictions and a general fear and hysteria around COVID. So that has been the general reaction function, and what I think is key going forward is what the reaction function to this new variant will be from governments and central banks, and I think it's not very positive for markets. I see this new variant as a significant risk, much more than Delta, because we are at a very different time in the COVID narrative. For over a year now, the narrative has been on reopening and vaccines bringing an end to COVID. But unfortunately, reality is much more different. The data from Israel and many other countries suggests that the vaccines lose effectiveness over time, and they aren't as good at preventing infection as we once thought. And even though you could argue that hospitalizations and deaths matter more, and the vaccines are effective at reducing those, the reality is that whether you like it or not, governments focus on cases, and they react to surging cases more than anything else. Just look at what's happening in Europe right now as a sign of what could happen soon in North America. Germany, Spain, and Portugal, all highly vaccinated countries, are all seeing a surge in new cases. In some places, the recent surge is the highest it's ever been. Austria, for example, has seen such high cases that they've announced a 2-week lockdown. Germany is also on the brink of a potential lockdown. Spain and Portugal are imposing stricter regulations. Gibraltar is the best example. They have a 120% vaccination rate, meaning that their population is fully vaccinated and getting boosters. They're one of the most highly vaccinated countries in the world, and yet their cases are surging and their government canceled Christmas. This invalidates all the rosy assumptions that we had that vaccination would be the solution. The vaccines will not get rid of COVID, and we have to all come to that realization eventually. Case growth rates in Europe are falling now, which is a good sign, but keep in mind this is before Omicron, the newest variant. South Africa's case growth rate is surging, for example. So if this is what we'll see as Omicron spreads everywhere, then we could be in for a very volatile winter. So that is the big risk to markets that I'm concerned about. Government-imposed lockdowns and travel restrictions leading to a contagious sell-off in markets coming on the back of very extended positioning and valuations. And governments are already responding to Omicron. Israel is shutting its borders to foreigners. Governments around the world have placed travel restrictions on Africa, and the new variant is already in Belgium, the UK, and Germany. It will spread all across the world, and my bet is that governments will react in the same way that they've reacted for over a year now, with new lockdowns, travel restrictions, as well as mask and vaccine mandates. Now, I could be wrong, and they might not do all that stuff, but so far they haven't given me any evidence to think that they will be more reasonable in dealing with this new variant. So the reaction function from governments, I don't suspect will be any different, but the reaction function from central banks is much different this time. Central banks can't respond right now like they did in March 2020. Rates are already at zero, and they've already done tons of QE, and they're starting to taper that QE, right? They're in the process of removing their liquidity from the market. So doing anything right now in response to a market crash would not look very good given that inflation is already so high. So it's unlikely that they come rushing in to save the day if we start to see markets tumble. Their tools are very limited right now, and it would take a massive deflationary crash to have them respond like they did in March 2020. And finally, Friday's price action makes me think that this might not be yet another buy the dip moment. And we've had a lot of those in 2021 so far. On Friday, oil crashed 12% and bonds rallied. Both moves were the largest that we've seen since March and April 2020. Not even Delta caused that type of reaction. In my opinion, this is a huge signal that stocks aren't reacted to yet. They were only down 2% on Friday. Volume overall was low since it was Thanksgiving in the US, and so people weren't at their desks trading. And so any moves on low volume should be taken with a grain of salt, and I'm definitely aware of that, but still the signal from oil and bonds is not positive so far. I don't agree with lockdowns and vaccine or mask mandates at all, and as much as I'd like to dismiss this latest variant as not being a concern, I can't ignore the very real possibility that governments will overreact when we start seeing cases surge in North America, similar to what Europe is seeing right now. And while the market before had the vaccines and reopening of economies to rally on the back of, now it seems people are slowly realizing that vaccines are not the silver bullet that they were once thought of. They won't get rid of COVID, and I hope that people are coming to realize that a long-term solution is not constant vaccinations, constant boosters, constantly showing your medical papers, and a slow slide into a more and more totalitarian state of surveillance and control where the media sends fear into the population. A situation where a country like Austria can make vaccination mandatory, right? A medical procedure being mandatory. We've never seen this level of totalitarian control before, and too few people seem to be worried about it right now. And by all means, I am not anti-vax in any way. I am myself double vaccinated, and I think anyone who is at risk of COVID should definitely get vaccinated. They are very effective at reducing hospitalizations and reducing your risk of severe reactions to COVID. I just see some of the trends and some of the developments going on in the world as a bit concerning. But it's not my job to figure out how to deal with COVID. All I worry about is trying to figure out how markets will move. And right now I'm very concerned. To me, this new variant changes things because now the prospect of vaccination is not as rosy as we previously thought. And I think that this fear and uncertainty of how we deal with the forever mutating COVID will take some time for us to figure out. And there might be some extreme volatility in the process. And this is all coming at a time when markets are very overvalued and fragile. So I'm being very cautious right now. And I hope many of you can be cautious as well. Most of the people that I follow on social media and YouTube seem to be dismissing Omicron, but I wouldn't personally dismiss it. People dismissed the risks of COVID back in March 2020, and they're doing the same thing now, but I'm afraid that they may be in for a rude awakening. Now, I haven't sold anything yet. I have reduced some risk in my trading account, but my long-term positions haven't changed. But my levels are set up, and if they break, I'm prepared to sell. Most of all, I'm going to be keeping a close eye on the news going forward. I really hope that I'm wrong, and then this turns out to be no worse than the market reaction to Delta, and that governments react a bit more reasonably than they did in the past. And there are a few things that could invalidate my thesis, because it's definitely, we are different than where we were in March 2020, right? It's not exactly the same situation. We have very effective vaccines right now and treatments that will most likely be good against this latest variant and any future variants. And there also seems to be less support for further lockdowns, particularly in the US. People are rightfully getting tired of COVID. But to me, the bearish arguments still outweigh the bullish arguments. The risk of surging cases and an overreaction by governments to stop the spread is pretty high, and central banks won't be responding as quickly this time if markets were to crash. I haven't been this concerned in a while, and I really hope I'm wrong. I'm definitely not calling for a crash, but I am concerned about the risks right now. And if you're a long-term investor, then you probably don't have to worry about this too much because market volatility doesn't really concern you, I'm sure, especially if you're investing for the very long term. Now, I don't think that a passive strategy like that will be the best strategy this decade, but who am I to say what will happen or how you should be investing? But I'm someone who is much more active, and I'm also partly a trader in markets, and so I will always try as much as I can to avoid a 20 to 30% correction. I'm not saying that's going to happen, just that as an active investor, I'm on high alert right now. Okay, so that's enough from me. Thank you, as always, for watching. Please be careful and be safe in these crazy markets, and I'll see you with the next video. Take care.